Alrighty, we're coming to you live, ladies and gentlemen, via Starlink. Welcome back to Tailosive EV live on YouTube. Today, we're going to be listening in on Tesla's Q3 earnings call. They did drop the shareholder deck earlier today, so that means things are looking good, essentially. As most people were anticipating, with record deliveries comes record profit, record gross margins. They're doing fantastic, even when you minus the electric vehicle credits, because that was a big complaint Tesla's had to deal with a lot over the years. Is a bunch of people thinking that, well, the only reason Tesla's profitable is because of these certain credits, even though the government doesn't seem to have really much interest in Tesla's success because of whoever they're putting in charge of the NHTSA or not inviting them to EV shows or whatnot. But people still think that, well, the only reason they're profitable is because of the credits. No, even when you subtract those, they're still looking great. So I'm very happy to know that Tesla's success is solidified. It looks like they're paying off a lot of their debt, which is a good sign. And in regards to, I mean, obviously, just some highlights here. $3 billion in operating cash flow, $2 billion in operating income, 27% gross margin, $13.8 billion in revenue. So it's safe to say, like, if you're into the financials, this was a very interesting quarter to see the average selling price go down while gross margin is still doing really, really well, even past the credits, of course. But simultaneously, if you're not really into the financials of the business and you don't really care much about, like, how's the company performing and that type of thing, then if in regards to actual product launches and stuff, not much to report in this shareholder deck. I was kind of hoping, after we saw we were reporting on the updated Cybertruck design, I was hoping that maybe we could see some differences with vehicle capacity, or them saying, we're starting to produce vehicles that will actually be for customers at one of our factories. Nothing really that groundbreaking in regards to product. Probably the biggest thing that stood out to me was that the phrasing they choose here, I think it's possible I'm misunderstanding it, but I feel pretty confident now. For Shanghai, it says, for standard range vehicles, we are shifting to lithium iron phosphate battery chemistry globally. So I'm not sure why they would say that if they're just they're just continually doing lithium iron phosphate in Asia. Global means around the world. So I assume that means the standard range Model 3, even in Fremont, is now lithium iron phosphate, confirmed. I mean, there were a lot of people telling me that that's already known, or that's for sure thing. I was a little bit confused, though, because essentially people with standard range Model 3 reservations got an email saying that, hey, your vehicle's backed up and you might get it by the end of the year, but it's going to be a while. But if you want to get your vehicle sooner, we are introducing a different version of the Model 3 that uses the lithium iron phosphate chemistry, and it's available from existing inventory, and you can just swap your order to that vehicle and you'll have LFP. But then people took delivery of their LFP Model 3s, and the EPA estimated range changed to 262. Then mysteriously on Tesla's website, the standard range Model 3 EPA range went down slightly to 262, the same exact range that is on the Monroney stickers for people who ordered the LFP Model 3. So a lot of people were like, okay, it's got to be LFP now by default, right? In other words, there's no other way to get a Model 3 standard range. They all have to have iron phosphate. I think this is confirmation that that transition has officially taken place. I hope I'm understanding that correctly, but yeah, no real changes here. Production capacity has remained the same. At least in the statements here, they haven't rearranged anything. Tesla Semi, Roadster, they still don't really know what they're doing. This whole section, I think, is kind of pointless. So overall, great numbers for the business in regards to how vehicle deliveries are going. Solar deployments are looking all right. Everything's fine financially. They're not in trouble anymore, that's for sure. We're kind of past the point of Tesla being like, oh, are they going to succeed? Are they going to fail? We don't know. Now it's like, yeah, we know they're going to be fine. But if you were hoping for some kind of breakthrough of like, Will 4680 Model Ys be delivered this year? The shareholder deck didn't tell us that, so that's why I'm excited to listen in on the earnings call today. Yes, you will be able to listen to it with me. I'm gonna have the stream pulled up here in a few minutes, and you'll see my reaction. But I'll shut up. I won't talk through the whole thing. Roman, thank you thank you for letting me know you like the content. What do you think about Sandy Monroe's new rant video? I've been working all day today, so I haven't had as much time to watch YouTube, but I haven't caught. Did he do another new rant video, or was he talking about I saw his old rant where he talked about how the US is just kind of intentionally holding up all legacy auto and ignoring Tesla and not really giving them any attention. I don't know if Sandy has commented on the new what is it, vice chairman of the NHTSA? I haven't looked into the story very much, but I know people are upset because the person they appointed is clearly not a fan of Tesla and has retweeted Tesla Q stuff. I haven't looked too much into it, but it sounds like there's enough people upset about it as is. I always just I always just find it a little bit funny when there's a ton of people that signed like a change.org petition, that's the word, because it's always like nothing happens. I mean, all you can really do with change.org is convince someone that a lot of people are angry about something. That doesn't really make a huge difference. So yeah, I think Tesla's going to be fine. I don't think maybe the rollout of full self-driving and autopilot might be a bit slowed down, but I don't think having this person in charge of NHTSA is going to drastically like kill off the rollout of all full self-driving software. At least I hope that's not the case. If it does turn into the case, I'll probably talk more about it. But until then, I think it's a little too much assumption and speculation. Just joined mad about what? A car's name? No, people were mad about I believe people were mad about a certain individual that got appointed to be charge of the U.S. government's National Highway Traffic and Safety Association, that has been known for tweeting very negative things about Tesla and retweeted like Tesla Q, which is people using that hashtag or that little sign on Twitter is people expecting bankruptcy, and they've said like this will never happen, or Tesla's, basically someone who's clearly anti-Tesla is in charge of the government. The government's Highway and Safety Administration, which some people are worried that that's going to result in Tesla being severely limited. And I think it's already been fairly clear that the current administration is not a huge fan of Tesla, given the fact that I don't think Biden has ever even said the word Tesla. Like they won't even acknowledge their existence, and they had the whole EV summit and didn't invite Tesla. I don't know, like, or they're framing the tax credit specifically to help everyone except Tesla. So yeah, it's kind of obvious to me that the government's not really super in favor, because either Elon Musk is too much of a wild card and too unpredictable, and Tesla doesn't use unions and that type of thing, so it ticks a lot of people off. So I think they're going to be fine. They have so much success between what's going on in Germany and that factory coming online shortly, and they're seeing tremendous success in Shanghai, to the point now where Shanghai is beginning to outproduce Fremont, which kind of blows my mind. And now knowing we're going to have another vehicle come online in Europe, I guess we'll also have a vehicle come online in Texas. But sorry, factories come online in Texas and Europe. But basically, I think Tesla is bigger than, like, I don't think they need to get along with the U.S. government in order to succeed. Like, obviously, there can be some bottlenecks and there can be some annoyances if the U.S. government is not supporting them in all their endeavors. But I think the safety numbers will speak for themselves. Like, some people going off on Twitter that are now government official, or government officials going on Twitter saying that full self-driving is dangerous and reckless. I don't think that means much. It's just someone clearly with a biased opinion. It's kind of, in my opinion, it's kind of unrealistic to assume all government officials can remain impartial and unbiased. I think everybody is. I've kind of built a career out of that, actually. I've kind of built my whole job around accepting the fact that everyone has a preference, everyone has a bias. And it's better to just admit what that is instead of pretend to be impartial when you're clearly not. So, certain people are more objective and impartial than others, but overall, like if Tesla has the data in court, to prove like, hey, we've done a lot of road testing with our vehicles, and we've seen there be a significantly lower accident rate when autopilot is turned on or when full self-driving is activated, and because of that, we think that this should be allowed, or we think that more safety endorsement for self-driving systems like ours should be permitted. If that shows up, I think it's going to be kind of hard to argue with numbers. If you bring out a whole chart in the court case, if Tesla's trying to legalize, more and more people not paying attention to the road. I'm not even sure if there are laws about that. I'm not a lawyer. I don't know the ins and outs of what Tesla can do. Like, let's say theoretically, right? Like Tesla Dojo comes on tomorrow, and instantly just self-driving gets really, 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 really good. Let's say it reaches Tesla's goal of like easily 10 times safer than the average human driver. Let's say, for the sake of the example, it's 15 times safer than the average human driver. Could Tesla legally roll out an update to their whole fleet? Everybody who's either subscribed or paid for full self-driving. Could they roll out an update that says now you don't have to pay attention to the road? Now you can sleep in the car? I don't know if there's a law preventing them from doing that. I mean, it seems like they've clearly been able to roll out the FSD beta to a bunch of people. That's not illegal, but they have the whole time required, supervision, keeping your hands on the wheel, keeping your eyes on the road. So is there a law that says, no, you can't tell your customers they don't have to pay attention anymore? But if Tesla has the data that proves the software is way better. I don't know. There might be a lot of lobbying and legislation that has to get passed, but I have a feeling that the reason it hasn't been passed, or the reason there's not quite a structure for liability of what goes on when you're no longer required to pay attention to the road, and Tesla says you can go to sleep in the car now and the car will drive you. There's probably a whole due process that quite hasn't been developed yet federally. That's like, okay, what happens if that car gets in an accident? Is the driver still liable and you're just telling them they don't have to pay attention? Or is Tesla now liable? And if someone died in a crash, does the Tesla software team get charged for manslaughter? I've seen that discussion. It's kind of a interesting question. I don't think so, but it's an interesting development. So we need a suburban-sized Tesla. My family doesn't fit in the X. Wow, you got a big family, Jay. Good for you. I'm going to get the stream up ready. It should be starting any minute now. You should be able to hear it. It's typically music when I first click on it. They got to want me to enter all my information, of course. But yeah, this is free information. You don't have to be a shareholder to listen in. Don't worry about it. Okay, let me make sure. Oh, are they not? Okay, the stream is up. Oh. I remember. I gotta change my audio settings. One sec. Just give me a minute. I have it set to the wrong thing. I think you guys would be able to hear it, but I would like to be able to hear it as well. Yeah, it's just music. Okay. I will unmute it once it officially starts. I'll be shrunk down though, so I'm not gonna take up as much of the screen as you can tell. Jeez, what are these beats? This music sounds different than usual. I would play the music, but I don't want to get copyright claimed, so hang on. Anyway, I'm scared that Semi and Roadster might get pushed out even further because of the future cheaper model. What do you think will happen? I think Elon, just like he runs SpaceX, they are rapidly changing their plans and schedules to fit their surrounding circumstances best, so it may not always be what we want. I want the Tesla Semi to be out now. I love the Semi, and I want the Cybertruck to come out now, but Tesla is arranging their schedule in order to maximize profitability and keeping the main thing, their mission statement true, which is accelerating the development of accelerating the transition to sustainable energy. So if not building the Roadster and instead focusing on the cheaper model helps them achieve their mission, that's what they're going to do. They're not like, their mission statement is not to build the Roadster. Their mission statement is not to deliver the Tesla Semi. So they got to do what they got to do. Okay, the music stopped. Oh, no, it didn't. It's just a new song started. But what do I think will happen? I'm thinking that the primary reason they've delayed the Semi is because they've realized that the Tesla Semi will work best with the highest range and the highest payload capacity when it uses 4680s in a structural pack, and they just don't really have the batteries for it yet. So once they figure out the ramp of 4680s, and particularly when Giga Texas and Giga Berlin are producing their own cells locally, that's when you're going to have a spare 10 gigawatt hours of 4680s coming out of Cato Road. And, you know, Tesla knows they can continue using LFP and 2170 cells for the Model 3 and Model Y. Oh, it's starting. Here we go.
Senior Director of Investor Relations. And I'm joined today by our CFO, Zachary Kirkhorn.
It's probably too loud.
And our Senior VP, Drew Baglino, as well as other executives. Our Q3 results were announced at about 3 p.m. Central Time in the update deck we published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events or results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answers portion of today's call, please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. But before we jump into the Q&A, Zach has some opening remarks. Zach?
Yeah, thanks, Martin. We're continuing to make great progress as a company, setting new records on each of the most important financial metrics for Q3. Overall, we delivered just over 240,000 cars, 20% higher than last quarter and 70% higher than the same quarter last year. We were also able to achieve an annualized production run rate of over 1 million cars towards the end of the quarter. The increase in production rate has primarily been driven by further ramping of the Model Y at our Shanghai factory. Additionally, we have made great progress increasing production volumes of Model S and have recently started the ramp and deliveries of Model X. It will take a bit more time to get this program back to prior volumes, but based on demand, we are targeting to exceed historical production levels. We have also completed the transition of our Shanghai factory as our main export hub. This has enabled us to supply more vehicles to the North America market and to introduce Model Y to Europe. Due to part shortages and logistics variability, we have not been able to run our factories at full capacity. It's important to note that while we have roughly doubled deliveries year to date, this has been exceptionally difficult to achieve. I want to thank our supply chain team for their incredible work and our production teams for showing impressive flexibility as we make adjustments real time. This team's expertise in the chip industry across all tiers has made a huge difference when managing through these challenges. Additionally, we never reduced our production forecast with our suppliers as we're adding capacity as quickly as possible. I also want to thank our suppliers for their dedication and partnership to Tesla. Despite these increases in production and generally higher prices, our backlogs are continuing to grow and average customer wait times are extending. The only practical way to address this in the immediate term is to do everything we can to build more cars on our existing production lines, which is where we are focused. Similar dynamics are also playing out in our storage business, as we are working to expand Powerwall and Megapack production as quickly as parts and cells allow us to do so. Additionally, we have made good progress on the in-house battery manufacturing program, and we're excited to have expanded the full self-driving beta program to more customers. Financially, our auto gross margins reached 30.5% on a GAAP basis, and just under 29% excluding regulatory credits, which is our strongest yet. This benefit primarily comes from higher volumes, particularly out of the Shanghai factory, increased mix of the Model Y, and we have made good progress increasing Model S volumes. The Model S has now returned to positive gross margin, and we expect this to increase with higher production and the ramp of Model X. As was the case in Q2, there was some net benefit from pricing actions. However, this remains small in the context of other contributors. Please keep in mind that given backlog, it will take time for the impact of recent changes to flow through our financials. Note that we are also not yet recognizing additional revenue from the FSD beta program. Supply chain challenges, including expedites, continue to provide cost headwinds, as was also the case with FX this quarter. While we are seeing an impact from the rise in commodity and labor costs, we have also been adjusting pricing, which should help to compensate. Overall, as I mentioned in our last call, our P&L continues to benefit from the marginal profitability of each incremental unit with higher fixed cost absorption. As a result of the great progress on margins, volume, and appropriate management of overhead costs, we were able to achieve an operating margin of just under 15%, exceeding the long-term guidance we've laid out previously. On cash, we generated record operating cash flows of $3.1 billion and continue to invest heavily in the build-out of manufacturing, supercharging, and service capacity. We also continue to retire high-interest rate debt, including the early settlement of our 2025 senior notes of $1.8 billion during the quarter. As we look forward, we are clearly quite a bit ahead of the pacing required to achieve our target annual growth rate of 50% this year. Q4 production will depend heavily on availability of parts, but we are driving for continued growth. We are also nearing assembly of our first production cars in Austin and Berlin. It's important to stress, while the first production car is an important milestone, the hardest work lies ahead in the ramp. Please keep in mind that we are pushing the boundaries on new product and manufacturing technologies at these factories, which makes it difficult to predict the exact pace of the ramp. These factories will also partially weigh on our margins as we work towards volume production. Overall, I'm very proud of what the team has accomplished, and I'm excited for our next phase of growth into Q4 and into 2022. The team has done a tremendous job improving our financial health in a short period of time, while also continuing to improve our precision and pace of execution. Thank you.
Thank you very much. And we will now take questions from institutional and retail shareholders that we posted on our website. The first question is, when should we expect the first vehicles to be delivered with 4680 cells?
Yeah, thanks, Martin. Early next year, from a non-cell perspective, structural battery crash, range, and reliability testing are on track to be complete this quarter. Testing to date has gone well, and the Fremont manufacturing line is on track to support. However, similar to what Zach said before, this is a new architecture and unknown unknowns may exist still. Our top priority is ensuring quality in what we deliver. And from a cell perspective, we are comfortable with the design maturity and manufacturing readiness matching the pack timeline I just mentioned.
Thank you very much. The second question from institutional investor comes, do you still expect to start production of the $25,000 model in 2023? What are the biggest hurdles from now until then?
Thanks, Martin. Yeah, we're working on a strategy to increase our production rates as quickly as possible. I think Zach spoke to that well. And we're doing this while trying to add the least amount of incremental complexity to the business. We don't want to add any new vehicles to our lineup when we're generally in a cell-constrained world, while there is still more runway to grow these existing products. We are focused on Model Y expansion in Austin and Berlin, ramping S and X further in Fremont to restore to past levels, while also growing 3 and Y production in Fremont and Shanghai. As we've mentioned before, after Model Y in Austin, our next product launch will be Cybertruck, and that timing, of course, depends on increasing cell capacity, both from our suppliers and through our in-house cell, as well as many other headwinds we face in the supply chain, and completing our currently full plate of products on the table.
Thank you very much. The third question is, with FSD beta training data sets set to explode exponentially as software is released to a wider and wider audience, are there any early takeaways with regards to how quickly versions can iterate and be pushed out from bi-weekly to weekly or even daily?
At this point, it's not so much about how much data can we collect, but how quickly can we process the data we've collected. This is where Dojo comes in, as we mentioned on AI Day. With substantially faster training computer in Dojo, we will be able to iterate more often than we do now. If, for instance, say the net takes 1 day instead of 1 week, it makes a huge difference in our ability to push out more updates. But realistically, there's a whole lot more that comes into play when iterating software updates. The whole infrastructure from top to bottom, including testing and validation, needs to be set up for faster iteration. So daily updates are not really realistic for now.
Thank you very much. The next question is, can you provide an update on future model development and how much diversity in your fleet will be necessary to achieve 20 million in annual volumes? The best-selling cars in the world today only sell slightly over 1 million units. So is it possible to achieve 20 million units with just SX3Y truck and the $25,000 car?
Thanks, Martin. Yeah, as we've mentioned before, we've seen record growth in both Model 3 and Model Y segments, where Model 3 is currently the best-selling luxury sedan worldwide. And as we mentioned at our shareholders meeting, Model Y is poised to be the best-selling vehicle in the world. Tesla continues to break molds in these vehicle segments, and we hope to do so with each new product. As we've said publicly, we will eventually expand the vehicle lineup to get to larger volumes, and we believe that we will need to be in all major segments across small, mid-size, large sedans, SUVs, and trucks to do so, along with, of course, the massive space of robotaxi.
Thank you very much. The next question from retail shareholder is, what is Tesla's goal for vehicle production capacity for the 4 current factories, Fremont, Shanghai, Austin, and Berlin, by 2024?
Yeah, thanks, Martin. Our goal as a company here is to grow on an average pace of 50% per year. And so you can extrapolate that out. There may be some periods of time in which we're well ahead of that. There could be some periods of time, despite best efforts, where we're slightly lower than that. But that remains the long-term goal of the company. In Fremont, we're continuing to push the boundaries of what's possible there. Over the last 12 months, we've done about 430,000 cars of production. And, based upon everything that we know in the factory, where the bottlenecks are, what the potential is, we're targeting to increase that another 50%. I think that will be a difficult goal, but that's the goal that the internal team has, and they're going to continue to push on that. As we look towards Shanghai, we're continuing to push the boundaries there, and we continue to ramp production there as well. So most recently, the ramp of the Model Y, which was our biggest contributor of volume in Q3, will continue to ramp that factory. And in our plans there with time are to keep growing the capacity in that factory. Austin and Berlin are interesting factories because our first iterations of capacity there are on Model Y, but we've intentionally set these factories in locations in which they have a quite significant amount of land and ability to expand. And so, we'll take Model Y at these factories. We're trying to get to 5,000 cars a week as soon as we can, and then we'll continue to push beyond that. Potentially even getting to 10,000 cars per week at those factories. And then we'll add Cybertruck here in Austin and continue to grow from there. So, our goal is to get to millions of cars per year over the next couple of years, and then ultimately in the long term, be able to achieve 20 million cars per year. We're going to grow as quickly as is feasibly possible with an eye towards a 50% annual growth rate.
Great, thank you very much. The next question is, what is your view on the tightening regulatory environment for FSD in the investigation and broad data request by NHTSA? Some of the recent nominees to NHTSA have been publicly critical of FSD, including engaging with short sellers online. How will you manage this environment?
Thanks, Martin. Yeah, as we have been for years, we always engage with NHTSA and other worldwide regulatory bodies to share our knowledge and to work with them on our approaches on both active and passive safety. There are ongoing regulatory inquiries taking place all the time, and especially on the subjects like FSD that are at the cutting edge of technology development. During these investigations, my team, myself, are always cooperative as much as possible. We expect and embrace the scrutiny of these products and know that the truth about their performance and the innovations our products have will ultimately be all that matters. In the end, and as I've said on previous calls, we take safety as a top priority in all our designs. This is because our primary motivation is coming from a team of incredible engineers designing software and hardware that saves lives and prevents injuries. In doing so, we'll continue to be transparent to the public on how our technology is both developing from an autopilot safety data, the latest of which we just shared in the shareholder update. And you can also see and review a wide variety of customer post FSD videos on social media. Back to you.
Great.
Yeah, just to add to that, I mean, as Lars said, safety is extremely important for Tesla. It's the right thing to do. And, you know, if you look at various independent testing and regulatory testing of our products, you can see the work of the incredibly talented engineers and the results of those tests. And, you know, our goal in developing safety-oriented software around the car is to continue to go beyond what the hardware is able to provide. If you can prevent a crash from happening, that's the safest way to manage this. And I think at a macro level here, what we're seeing, and this is entirely understandable and expected, is that, you know, the automotive industry is going through a transition from the traditional car as we know it to more of a computer software-oriented sensor suites around them that can manage things beyond just what the driver manages. And regulatory bodies are understandably so, are interested in understanding how to regulate in this environment. And NHTSA is no exception to that. So as Lars mentioned here, I think this is a great thing. We're excited to partner and we'll work collaboratively with all regulatory bodies who want to go on the journey to the transition to a software-oriented vehicle.
Thank you very much. The next question is, service remains an issue with appointments available weeks or even months out. Likewise, supercharger wait times have become untenable at some locations. What concrete steps is Tesla taking to improve the customer experience in these two key areas?
Yeah, I'll take the service part of this question. Drew, you can take the supercharging part. You know, we have seen an increase in service wait times throughout the summer. And there's a couple of things that have contributed to that based upon the information that we have. You know, the first is that, and I think this is kind of not unique to us, is that the return to some sense of normalcy in a post-pandemic world has happened, I think, more quickly than most people expected. And what we're seeing here is that the number of miles that people are driving has increased. There may have been some demand for service during 2020 or in the early parts of 2021 that customers put off. And so there's a bit of a catch-up that's occurring that has increased demand for service. At the same time, in the macro environment here, logistics, moving parts, sourcing parts has become increasingly more difficult, which is a well-known issue in the world right now, as well as challenges in the labor market. And so there's kind of this simultaneous increase in demand for service where the ability to supply that service has been impacted for the reasons I mentioned. And so, you know, we saw an uptick primarily in Europe and North America in service wait times over the course of the summer. And we've been working extremely hard since then to address this. And we've seen our wait times come down. So this is not the case in every location, but if you think about it from regional average perspectives, we are seeing improvements there. We remain super focused on adding locations. And so over the last year, we've grown our physical footprint of service centers by 35%. We've grown our footprint of mobile repair by over 40%. We're also adding staffing as quickly as we can in the areas that are most impacted by the imbalance of supply and demand for service. But I think the most important part about all of this is, and we've said this on calls before, where the best service is no service. And so we have been incredibly focused as a company, both on the initial quality of our vehicles and reliability of our vehicles. And we've seen pretty substantial improvements in both of those metrics over the long term and over the last couple of quarters. So it is something that remains on our minds. We monitor this very closely, but hopefully that's a helpful explanation into the context and what we're doing.
Yeah, and on the supercharger side, the supercharging team monitors congestion and plans expansion to ensure customer experience with minimal wait times alongside the growth in our vehicle fleet. While we certainly have work to do in expanding capacity in some congested areas, average congestion on the network has decreased over the past 18 months. Nonetheless, we're not standing still. We are executing accelerating expansion plans globally. The network has doubled in the last 18 months, and we're planning to triple it over the next 2 years. And even so, on an individual site basis, to combat existing congestion more quickly where it is isolated and problematic, we expedite local relief sites, deploy mobile superchargers, and we try to introduce pricing strategies that encourage more off-peak usage to avoid the waiting.
Thank you very much.
And just one thing to add on supercharging. If you haven't experienced our latest iteration of battery packs that can handle fast charge rates in combination with our 250 kilowatt charging stations, is pretty incredible. And this is a really important component to supercharging capacity, because the faster you can charge, the more charge sessions that you can have on an individual post, the better the customer experience is as you're going on a long-term journey, because your supercharging times are lower.
Yeah.
So this is a really important part of the strategy. Supercharging team has done a great job rolling these out. But it requires a combination of both the 250 kilowatt charging and our latest iteration of battery packs.
And we've also maintained an ongoing roadmap on software improvements, dynamic routing to avoid busy superchargers. That's actually really helpful. We take the real-time busyness of the stations into account when choosing where to navigate people on their road trip. And beyond that, we're also continuing to improve the trip planner itself and how it estimates how much energy people use, so it's not too conservative and asking people to charge more than they need to, which is another thing that can delay a total trip.
Great, thank you very much. The next question is Tesla considering any other ideas other than FSD with real-world AI that can bring additional software revenue to Tesla? If not, can Tesla consider building interesting games around FSD beta?
Sure. At AI Day, we did talk about a potential future where Dojo could be used as a neural net training platform for other companies. It's not a focus of ours today, as we're fully subscribed on Dojo with our internal uses. We do expect to continue to improve the in-car experience in the context of FSD.
Great, thank you. And maybe last question from shareholders is, how has FSD take rate changed since the introduction of monthly subscription? Are there any plans to increase the FSD pricing as wider release becomes imminent?
I'll take the second part of the question first. We won't be providing any kind of forward-looking commentary on our pricing strategy or what may happen here over the near term. With respect to the first part of the question, it has been an interesting thing for us to unpack within the company. I mean, what I'll say just as a general statement before I make a couple specific comments is that the things that we learn on FSD subscription today are not necessarily all that relevant. This is really more of a platform for when FSD beta goes into wide release and the features and functionality become more accessible to more customers. The second thing that I'll note is that if you look at the pricing, the monthly pricing of FSD subscription, and then you compare that to the cost of either rolling FSD option into your lease or your loan, on a monthly basis, the most economical way for a customer to enjoy the features of full self-driving is through purchasing it up front and rolling it through their financing. And as a result of that, what we've seen in the data is we're unable to detect a change in the upfront take rate of FSD when people purchase cars. We have seen quite a bit of activity of folks curious to experience what the software has to offer and subscribing to it and enjoying it through that route. But again, as I said at the beginning, I think what we've seen so far on FSD subscription is not terribly relevant. We'll see how that plays out in the future as we continue to release more features.
Thank you very much. And now let's go to analyst questions. I just wanted to remind everyone to click on raise hand button if you want to ask a question. The next question comes from Pierre Ferragu from New Street Research. Pierre, feel free to unmute your mic and go ahead. Pierre, I think your mic is muted. Okay, while Pierre works on that, let's go to the next analyst. The next question comes from Joseph Spak from RBC. Joe, we cannot hear you. Can you click unmute? Okay. While the team is working on that, let's just go back to Say.com questions. So the next Say.com question is, can Tesla allow for FSD to be transferred to another vehicle at a fee, something less than 10K? Early adopters are paying the price if they want to upgrade their vehicle. You lose the value on the trade-in, and now you have to buy in at a higher cost.
I don't think that this is widely known, but we're already actually doing the sentiment of what this question is asking. If you trade in your Tesla to Tesla, there's a difference in price that we pay for a trade-in that has FSD compared to one that doesn't. And so there's that premium that we pay to repurchase the FSD. That money can then be applied towards the purchase of a new car. So I just, we hear this feedback quite a bit. We see it on social media, we see it in the forums, et cetera. And so this already does exist. Not directly in the form here, and we don't call it out explicitly in the trade-in, potentially that we have increased the price of your trade-in as a result. And hopefully this clears this up because we do actually do that.
Okay. And the next question is, Elon said that we get an update on Cybertruck in November a year ago, but it hasn't happened, and we know there are a lot of updates. Will you show off the new and improved Cybertruck?
Yeah, thanks, Martin. You get a lot of questions on Cybertruck. We've been busy detailing the Cybertruck to achieve the prototype version we shared with customers a while back. As you may have seen recently on social media, we've built a number of alphas and are currently testing those to further mature the design. And while those point out a few key additions like rear steer, there are also a number of smaller or less visible improvements, though the product is largely true to the initial vision. We'll continue to work through the product in the beta stages that we're in now and look to launch that late next year.
Okay. Thank you very much. We just promoted Pierre to a presenter.
Yes.
Hear us?
Can you hear me, guys?
Yes, we can hear you.
Amazing. I'm very impressed that you managed to figure that out.
We are too.
Thank you, Pierre.
I would have panicked if. Anyway, let me ask you my question. I'm very intrigued by what you guys are doing on the insurance front. And so you have now in the market in Texas an insurance product for which the premium varies as a function of the safety score of the driver. And so I'd love to hear you about that. You must have some initial data points about market reaction, what's the uptake, And from there, can you tell us about how you think you're going to distribute that? Is that going to go through your install base very easily, or is it going to be like a heavy marketing push? And then maybe tell us about your expansion plans. You know, what are the next geographies? What's the timing? How fast is that business line likely to grow in the next few years?
Yeah, thank you, Pierre. I'm extremely passionate about our insurance product. We have a terrific team here at Tesla of folks who have been spending a lot of time developing this. They're probably listening to the call, so we're pretty excited so far, Pierre. So, I mean, at the highest level here, you know, we entered the insurance market kind of unintentionally, I would say. You know, our customers were coming to us complaining that the price of traditional insurance was too high, and it was reducing the affordability of a Tesla. And part of our journey here at Tesla is we want as many people as possible to be able to afford our products. That's extremely important to achieving the mission of the company. And if you look at the price of insurance as a percentage of what somebody's monthly payment is, it's quite high. And we spend extreme amounts of effort in manufacturing to take $5 of BOM cost out here or $10 out somewhere else. If we can get, you know, $5, $10, $20, $30 out on a monthly payment, you can calculate what that means in terms of reduction of the price of the car if you finance it. And the leverage of improving insurance cost is huge in terms of affordability. And so that's kind of the context by which we stepped into this. As we started to do more research, you know, essentially the tools by which the insurance is traditionally calculated are optimized based upon the existing data, but the existing data is limited. So there's a focus on things like marital status or age or other attributes like that. You know, accident history is a good one, et cetera. But what essentially happens here is customers who are low risk and don't actually file many claims end up overpaying on their insurance relative to their cost. That overpayment then goes to riskier customers who are essentially being subsidized. And, you know, as we looked at this and we looked at the data, we thought this just doesn't seem like it's fair. You know, at Tesla, because our cars are connected, because they are essentially computers on wheels, there's enormous amounts of data that we have available to us to be able to assess the attributes of a driver who's operating that car and whether those attributes correlate with safety. Because we do get a signal when a car has been in an accident. So we've been spending our time looking at, you know, hundreds of different variables and also looking at billions of miles of driving history. And we've been able to fit a model that is able to predict with decent accuracy the probability of collision over a period of time. And the model is not perfect, right? The model is a function of the data that we have available. That data set continues to grow. We continue to experiment with new variables, but we do have a model that works pretty well so far. And from that model, being able to predict frequency of collision, we can then align that against a price curve. And we can have individualized pricing integrated into the car, integrated into the app, integrated into that customer's experience with a feedback loop back to the customer on how they are driving after every drive, the attributes that they were successful on or unsuccessful on, and the tips of things that they can do to improve their safety. So that's what we've developed. We then included the safety score as a part of the FSD beta enrollment program, where, you know, we have almost 150,000 cars currently using the safety score, and I believe the latest data is over 100 million miles of driving. So we've been able to go back and analyze that data, and we've learned two things coming from that. The first is that the probability of collision for a customer using a safety score versus not is 30% lower. It's a pretty big difference. It means that the product is working and customers are responding to it. The second thing that we've looked at is what is the probability of collision based upon actual data as a function of a driver's safety score. And that is aligning with our models. Most notably, if you're in the top tier of safety compared to lower tiers, there's multiple X difference in probability of collision based upon actual data. So, this is a very new and very exciting frontier for us. I know that was long-winded, but we spent a lot of time on this and we put a lot of thought into it. Specifically with respect to the rollout, the insurance industry in the US is intensely regulated, and it's regulated on a state-by-state level. That means that we require regulatory approvals from each individual Department of Insurance at each individual state. Texas is the first state that we launched in. I do want to thank the Texas insurance regulators here. You've been great to work with. We have a roadmap of additional states. We will launch the product in those states as we receive regulatory approvals. And our goal is to be in every major market in which we have cars in. We did a soft launch in Texas, was it last week? Yeah. And what we're seeing in initial take rate data is that, if you compare that to what we're seeing in California, we're off to a good start here. So we're very excited about it. We're excited about individual risk-based pricing. We're excited about the ability for folks to become safer and as a result, save money. And it feeds into our priority of a company of building the safest products in the world.
Yeah, if I can add to that, it's really exciting for the engineering team to see the finance team and taking on safety into their world too. It's just pervasive. So thanks for that, guys.
Thank you, Lars.
Thank you. Pierre, do you have a follow-up question?
No, I think I'm fine, Zach. Thanks for taking the time to answer. It's fascinating and very interesting. Yes, I look forward to looking into that.
Thank you very much. The next question comes from Joseph Spak from RBC.
Thanks. Can you hear me?
Yeah, we can hear you.
Perfect. So Zach, as you noticed, or as you noted, you hit low teens operating margins. That was your medium-term target. You're there now, despite the number of challenges and not full utilization of some of the plans. So, how are you thinking about that target now? Does it allow you to either drive price down further to unlock more demand, invest in other initiatives, or does that target need to change? And in longer term, do you have an aspirational gross margin target as the mix of software and hardware changes?
Yeah, we've actually exceeded our long-term guidance on our operating margin target. So we're very pleased to see that. And as we look out over the next quarter and the next year, there's a number of puts and takes financially for the company. The launch of Austin and Berlin will have rampant efficiencies there for some period of time until we get those factories up and running. And so that's likely to put some downward pressure on our margins as those factories ramp. Our goals are to ramp those as quickly as possible. But as Drew mentioned earlier, there are a number of unknown unknowns that we'll need to work through. We are kind of also in this uncertain environment with respect to cost structure. So we are seeing costs increase on the commodity side. We're getting feedback from our suppliers as we are seeing ourselves, the impact of labor shortage. And then logistics and expedite costs just continue to be a part of our story here. And it's uncertain how that will unfold. It's our hope that these things stabilize. Exactly when that happens is difficult to predict. And we have been adjusting pricing in line with those changes in cost. And so we'll see how that unfolds over the course of the next year. So it's difficult on gross margin to say where that will go, for those reasons. With respect to operating margin, we've been very focused as a company on managing our overhead expenses and operating expenses. And operating expenses as a percentage of revenue has been declining, and I expect that trend to continue to happen. And I think the net of all of this is hopefully that we continue to make progress in operating margin over the next 4 or 5 quarters. As we think kind of forward, the business up until this point has kind of largely been a hardware automotive business with a little bit of software on top of that. As full self-driving matures, as take rates increase, if we are to raise pricing on that, there's considerable upside both on gross margins and operating margin as that comes to light, as the business starts to become more of a mix of a hardware-based company and a software-based company. So, we feel optimistic about the journey, very optimistic about the journey as we look over into the long term. Just a little bit difficult over the next 4 to 5 quarters. We'll continue to update on earnings calls as we learn more information. There's just a lot of uncertainty in the world right now.
Thank you. Joe, do you have a follow-up question?
Yeah, the second question is just, you mentioned LFP packs globally for standard range models. My understanding is that all comes from China. Is that the continued go-forward plan, or do you want to develop LFP capabilities in other factories around the world?
Yeah, certainly our goal is to localize all key, parts of the vehicles on the continent, at least the continent, if not closer to where the vehicles are produced. So that is our goal. We're working with, internally and with our suppliers to accomplish that goal, and not just at the end assembly level, but as far upstream as possible.
Thank you very much. And the next question comes from Colin Langham from Wells Fargo. Colin, are you able to unmute? Okay, while we're waiting for that, let's go to the next one.
Do you hear me now?
Sorry, yes, we can hear you now. Perfect.
Sorry about that. Okay. Yeah, just actually kind of following up on the question before. You'd mentioned commodities are rising, and when I look at a lot of the key raw materials in the battery, cobalt, nickel, lithium, all up 40%. And I know you guys have, done a good job of getting long-term contracts to sort of mitigate that impact. I mean, have you seen so far any impact from that spike? And if not, I mean, any sense of when that raw material headwind might actually show up or has shown up?
Yeah, we have seen an impact. Our primary exposure right now is around nickel and aluminum, nickel in the cell, aluminum and non-cell. And, we have a mixture of contracts with various suppliers. Some materials we contract directly and we have full exposure to price fluctuations. We do have a number of long-term commitments, long-term contracts in place. We also have contracts where there's some amount of cost sharing based upon the movement of indexes. And so, as these have been moving, some of those costs have been flowing through to us. It's not a substantial amount of cost, but it's not small. As we look towards the next year, I certainly hope it doesn't play out this way, but it's possible that we continue to see more of cost headwind as a result of these movements. It's difficult to say precisely, but the volatility and the increases are just substantial. And there are certain suppliers that maybe up to a certain point have been absorbing some of the increase. And as contracts expire there, or we have to renew and extend them, we'll have to return to negotiations. And so, what we have to do as a company and what we're intensely focused on is we need to be continuing to drive down the cost of our products, which we have been doing. And we have to overcome cost increases that are outside of our control. So whether that's resourcing components or redesigning components or finding ways to be more efficient in manufacturing, we have no choice but to continue on that path and be even more aggressive in the light of the macroeconomics here.
And diversification, right? Like, doesn't need to be nickel or cobalt, or, I mean, there's always another option.
Thank you. Colin, do you have a follow-up question? Okay, let's go to the next one. The next question comes from Colin Rush from Oppenheimer.
Hey guys, can you hear me okay?
Yeah, we can hear you.
Perfect. Can you talk a little bit about your strategy around anode materials and your ability to leverage that into reduction on the cathode side and performance from the LFP?
Sure. I don't know that I'm going to get into too many specifics, but I guess first, one thing I would say is, unlike the commodities discussion we just had, like the anode materials are not really in the same situation, just in terms of what their constituent components are. So there's less of a focus on like rapidly changing them one way or the other, because they're generally stable commodities. There isn't exactly like a tit for tat where like get a better anode, use less cathode. Like there's a fundamental ratio that you need to maintain for the cell to function. So I guess zooming out, the primary focus on the anode side that we have is just ensuring that it doesn't in any way, that we are able to continue to reduce the cost of the anode without impeding on the long-term cyclability of the product. It can also help with energy density, you know, as you like sort of improve the energy density of the anode, you improve the energy density of the cell, not directly one-to-one, because you have to pack more cathode in as the anode gets better. And that's a focus as well, but the trade space is just sort of cycling versus day one cost.
That's super helpful. And then just around the vehicle pricing strategy, obviously there's a lot of flexibility there for some customers and not. Can you just talk a little bit about the process around vehicle pricing and how quickly you expect to change that and adjust as you see some of these commodity prices flow through the cost structure and you look at the demand dynamics for vehicles?
Yeah, pricing has been a really difficult thing for us over the last couple of quarters. And where part of the challenge is, the great thing that we're seeing in the space right now is, there appears to just be quite a profound awakening of the desirability for electric vehicles. And to be totally frank, it's caught us a little bit off guard. And that kind of awakening and change in consumer sentiment, I'm sure there's lots of reasons that go into it, but folks want to buy an electric car and folks want to buy a Tesla right now. It's very exciting for us. At the same time, we have installed capacity to build more cars, but we're constrained by a number of dynamics, as we've talked about in great detail. And we are putting in extreme effort to build as many cars as we possibly can. It's hard to overstate how extreme the efforts are. It's quite the grind. We're trying as hard as we can to maximize that capacity and to be able to meet the demand that we're receiving. But the net of all of this is that we're not able to increase production capacity fast enough. So, at the same time, we are seeing macroeconomic cost impacts on our structure, as we've discussed previously on the call. So we're trying to think through, if somebody orders a car now, it could be delivered in some cases, depending upon the car and which factory, could be a couple of months, could be a couple of quarters. And the timing in which we build that car will be just before that car gets delivered. And what will the world look like at that point? And so we're trying to think through how the cost structure is evolving. How does pricing need to change with that? What are the supply dynamics in the space? The other thing that I'll just note on pricing is that companies change pricing all the time. The difference is that when Tesla changes pricing, it's extremely transparent, where that's not always the case otherwise. And, sometimes our pricing will increase, sometimes our pricing will reduce. Sometimes to the public, our pricing changes may not seem to make logical sense. But, there is a strategy that we work behind the scenes as we're balancing supply and demand, as we're also trying to balance various shortages on parts, as we're trying to manage wait times. All of that goes into the optimization here.
Okay, thank you very much. The next question is from Brian Johnson from Barclays. And Brian, please go ahead and you can unmute.
Tesla team?
Yeah, we can hear you.
Yeah, no, it's
Absolutely.
by the way, great to hear there's a team at Tesla, not just a one-person show. I want to drill down a bit more on FSD. In December of 2020, in a Business Insider interview in Germany, your leader said that he expected level 5 autonomy by December within a year, so that would be now. Yet, we look at the progress in FSD and some of the issues you see on YouTube, and it looks very much like a level 2+ system that requires vigilance, as in fact your disclaimers say. So I guess 3 questions. Kind of one, what is the timetable to get to level 4, at least capability? We can deal with the regulatory stuff later. 2, what is the criteria for Zach for you to release deferred revenue around FSD, and is having a level 2 system that needs monitoring enough to release that deferred revenue? And then 3, maybe you could talk a little bit more about how you plan to work with the new, with the folks at NHTSA who appear to be, asking some questions. They have 3 requests out to you regarding information around the level 2, around the capabilities of FSD.
Yeah, so I guess we'll take them in order. It's difficult to be specific on the timelines. The Autopilot team is working extremely hard, iterating on every version. We are being extremely transparent, through the release of this to public customers who are posting information online. So, when you're using full self-driving and you're going through the iterations, you can feel the progress. And for those who don't have it in their cars, social media is excellent at getting a sense for how that's progressing. And the team is moving quickly with every iteration, with every update, and they're working very hard on that. On your second question about the criteria to release deferred revenue, the way that this works is, we have made certain commitments as to what this product can offer at the time that a customer has purchased that. And so what we have to assess is, have we met those commitments, and is the software widely available to the folks that we've made those commitments to within a certain geography. And given that FSD is still currently in the beta phase, it's invitation only and it's limited, we have not deemed that to be appropriate for recognition of deferred revenue. And we'll continue to evolve this. We'll continue to monitor it within the finance team to see when we get to the milestones in which we're comfortable releasing. On the NHTSA question, Lars, do you want to take that?
Sure. I mean, as I said earlier, we always cooperate fully with NHTSA and other regulatory bodies in any sort of investigation they may have, particularly related to ADAS systems. When they came out with the standing general order in July, we were quick to respond to that, and one of the first and only companies capable of actually meeting the needs of that report. We continue to send that information to them as required, weekly, and as incidents occur. And with the additional investigations, as I said, we meet that with great sincerity, and we'll work through them one by one to make sure that all the facts come out, and that NHTSA is well informed about our strategies for both active safety in this case, but also passive safety. As you guys may know, we released updates to our airbag and restraint system last week to Model Y using our fleet data. We worked closely with NHTSA on that, and they were fully in the loop before we did it. So I think these kinds of things will continue to happen in the new regulatory space that Zach discussed as we move towards a software-based vehicle, and we're happy to be a part of that journey.
Thank you very much. And the next question comes from Trip Chowdhury.
Thank you. Very good quarter. I had two quick questions. First is regarding the two upcoming factories in Berlin and Austin. Who are the two factories different from each other, maybe in the layout, design, assembly lines? And the second question is related to Cybertruck. Who is the supply looking at? If you look at the exoskeleton steel, is the supply for that material sufficient for immediate ramp up, say in 23, 24 time for Cybertruck? That's all for me.
Yeah, sure. So obviously, as we've noted in the past, we developed our own stainless steel grade for the exterior Cybertruck to meet both the durability and corrosion requirements required for an automotive world. With this raw material and others, as Drew mentioned, we continue to look at multiple sources. We have made some early sourcing decisions in that, but I think we'll keep that one internal, and we've already began the first castings of that. Rolling stainless isn't so different from rolling any other material. It's just about how hard the rollers are to get to that hardness level. And, just like every manufacturing process we put in for every new vehicle, we'll work with our suppliers and vendors to make sure those timelines and supply meet the need and demand of our customers.
And on the differences between Austin and Berlin, there are some. They're largely associated with the different sort of building architectural choices that were, happen to occur in collaboration with like local codes and other sort of governing requirements that drive the differences in the architecture between the locations. In general, though, like we're trying to progress the manufacturing system as a system and make sort of logical, like path-defined improvements from factory to factory. And in some cases, there was an improvement identified between like decisions for one Austin, the other Berlin, or vice versa. And so there might be a slightly newer iteration of one part of the factory in one place than the other, but it's all part of a path forward in the factory that builds the machine that builds the machine, sorry.
Thank you very much. And the last question comes from Jed Dorsheimer from Canaccord.
Hey, can you hear me?
Yes, we can hear you.
Hey, thanks for taking my question. So, Brandenburg, I'm just wondering, Zach, if you could estimate the carry cost from a margin perspective, or I guess in two parts. So, when do you still expect production coming on in 21? So, a couple months left in December, and how do you see that margin impact as a function of the carry cost? And I do have a follow-up question.
Sure. So it remains our target in both Austin and Berlin to be able to build our first production cars before the end of the year. We've talked about this a bit, the unknown unknowns, new factories, new vehicle designs, new technologies, new locations, new teams. So, there's quite an execution journey ahead of us, but that remains our target, and all of our plans are oriented around that. We should not expect for us to deliver cars by the end of 2021 from these factories, even if we do produce some. So homologation, regulatory reasons, and we'll want to make sure that we build up some number of cars that we're confident in the quality and the customer experience around them. The second thing that I'll say, and I mentioned this in my opening remarks, is because of the newness here, it's extremely difficult for us to be precise in what the ramp will look like. And it's possible the stars align and things move quickly. It's possible that we're spending the bulk of next year working on ramping these factories. It's just very hard to say. and we'll continue to update you all through these calls and through other forums. As to how that then impacts our margins, that is also difficult because that is a function of the ramp, which is uncertain. So the benefit here, which is different in the ramp of these factories compared to other factories, is if you think about the percentage of our total cost structure in any given quarter that is associated with new ramps, we have the Fremont factory that's running, generating stable and growing margins there. The same is also true in Shanghai. So I expect we'll see some amount of headwind on margin from these ramps. It's just entirely dependent on how quickly we're able to ramp and what uncertainties come up during the process.
Sure. So on a margin per car, but I would suspect though, if your carry cost is full right now on that as you start producing vehicles, it's going to be a margin lifter from where you're at right now. No?
I mean, we are carrying some amount of cost associated with the factories today. And so the incremental cost associated with turning the factories, it's not 100% of a factory, if that's what you're getting at in your question.
Yes. Yep, that's what I was getting at.
Yeah, we also actually saw a very similar dynamic to this when we were launching Model S earlier in the year. So, when a product starts launching, and then cost of goods sold starts to activate, depreciation starts to activate. There's a bit of a movement in the P&L as to where that cost resides. So yes, I mean, to some extent, Brandenburg and Austin costs are already flowing through our P&L, but we still need to continue staffing and ramping and incurring all the operating costs associated with the factory that we're not spending right now.
Fantastic. Thank you very much, everyone, for all your questions. And we'll see you again in 3 months. Thank you very much and goodbye.
All right, ladies and gentlemen. Wow, this music slaps. I hope it's royalty free. Well, there we had it. Q3 earnings call, fairly uneventful. Also wanted to give a quick special thanks to Riley McGinnis. Thank you for supercharging the channel right in the middle of the earnings call. That was very nice of you. Thank you. But yeah, there wasn't too much new information to report on. I mean, I'll be honest, I feel like the earnings call lose a little bit of their variety. They've lost a little bit of their spontaneity without Elon. I saw many people saying on Twitter it's very structured and scripted now, which I guess is the point. As you become a bigger company and as you are becoming more professional, you can't really just give away much. You can't just give out special announcements you want to reserve for different events. So yeah, it's just kind of standard now to just be like, well, that's what we said before, and what we said before is still true. It's also probably not helping that this was the earnings call we got in the same month as was it the same month as the annual shareholder meeting? Yeah, wasn't it early October? So yeah, like we just had a big meeting. And we had GigaFest. So Elon was speaking at GigaFest in Berlin, and he was speaking at the shareholder meeting in Texas. So this was kind of like the idea that there would be new updates or new information to report on at this call after we just had a bunch of stuff to talk about at the other events, I guess is a tad unlikely. Yeah, they don't want to reveal or drop too much new information at these things, I suppose. And as much as I appreciate the updated audio quality, I'm not sure if I in the future will want to always live stream every earnings call. For those who don't know, I started doing more YouTube with Apple-based content, and I don't stream those earnings calls just because there's really not much information there. And I feel like we're slowly getting to that point with Tesla, but I don't know. Like maybe they've decided in more recent history they feel like saving announcements for special events instead of dropping any kind of exclusive info during earnings calls, because I felt like we didn't really get much. I'm glad Mike liked it. He said good info and questions. I don't know what main takeaway there was from this event other than, yep, everything we said before is still what we meant. Like, I guess it's I guess I'm not saying it's bad information. It's just not new information. It's information we're already aware of, and people were kind of prying in the questions for more information, and asking for new info, and they didn't really want to budge much. They were like, "Yeah, do you still plan on making the 25K Tesla in 2023?" And they were like, "It'll depend on how the production ramp for everything else goes." So yesn't, I guess. And you know, how are you? What suppliers are you working with? They're like, we're working with several suppliers. I guess the one piece of slightly new information to me was they finally asked the question that I really want answered at the annual shareholder meeting, which was, when will the first 4680 Model Y be delivered? And they said early next year, while simultaneously they keep saying we expect the first production-ready vehicles of Giga Berlin and Giga Texas to be made by the end of this year. So I think that unintentionally confirmed that they are definitely using 2170 cells at first with the new Model Ys, and they'll be moving to 4680s later on. But they didn't provide a very concrete timeline. You know, they just said early next year, the first 4680s will come out, which does technically somewhat disagree with what Elon was saying at the annual shareholder meeting, but Elon's a busy guy. He's got several giant companies that he's maintaining and operating. So I'm not shocked if Elon is not completely in the loop, because I think Tesla is getting quite big to the point now that he feels comfortable not being at every earnings call because he's got a lot of busy stuff to do. He's spending a lot of time at Starbase for SpaceX, and I'm sure working with the engineering team a ton at Tesla. So when he said at the last shareholder meeting that Cato Road would provide enough batteries for Giga Texas, that's what made me think, oh, that must mean they're going to do a 4680 by the end of this year. But then they didn't agree with that with this. They didn't agree with that with this earnings call. So I'm theorizing. I'm theorizing that means they're starting off with 2170s, but I'm curious which ones. You know, I would have loved a bit more clarity on that. Like, are you just going to start making dual motor long range Model Ys that people have already ordered and just start delivering some of them from Texas? Like, if you're seeing a bunch of long range Model Y orders from the central or east coast, the central United States in the east coast, will random people who ordered Model Ys from there suddenly just start getting Texas made Model Ys? Or will there be a way specifically to order a Texas made Model Y in the United States? I don't know. Hey, Diesel, welcome to the chat. Just got a Tesla hat too. This was a gift from my cousin, actually. He picked it up for me, which was really nice of him. Shout out to Matt. Let's see. Voltuli says, no wonder there's a class action lawsuit. I don't know what class action lawsuit you're referring to, but I actually don't think it's that big a deal. Like, I don't think it's the end of the world that full self-driving is not transferable. I know a lot of people want that, but I think it's very easy to wish for something that would be more convenient and more affordable for the consumer. And if you don't consider what it would cost for the business, there's a lot of things that I could suggest, right? Like the very one-sided, not two-faced, but two-dimensional argument could just be like, Tesla should sell their cars for cheaper. Make their cars sell their Model 3 for $20,000, right? As a consumer, it's very easy for me to just say, like, it should be half the price that it actually is, because then it would be easier for me to buy one. But then, of course, the flip side of that is, well, if Tesla sold $20,000 Model 3s, probably a ton of people would order it, and Tesla would lose too much money on each model, so they would eventually go bankrupt because they couldn't afford to sell their vehicles with profit margins that low. So the company basically shrivels up and dies because they tried to make the consumer happy and give them exactly what they want. But of course, you need to find a way for the company to be profitable and the vehicles to be affordable. You can't just prioritize one or the other. Obviously, if you just made the Model 3 $100,000, then no one would buy it. It wouldn't really help Tesla accelerate the transition to sustainable energy. So figuring out what works best for the customer and the company so that they both can be happy and they both can succeed, that's the challenging thing. And I know a lot of people think that full self-driving, you should be able to buy it once and then move it to another vehicle and then move it again to another vehicle. But that means you don't have to pay for full self-driving basically for life. as long as it's transferable. I don't know, maybe some people were suggesting that you can transfer it once and then never again. I don't know. I feel like there would be people complaining no matter what, and that if that's the case, if they let you transfer it once, there would be people saying you should be able to transfer it 2 times or 5 times. So there's always going to be people saying like, I don't want to have to pay for full self-driving all over again, but this is a revenue stream for Tesla that's highly profitable, whereas vehicle sales, particularly electric vehicle sales, are very difficult to do profitably, especially as inflation is hitting the US dollar. Things are less not worth what they used to be. And that alone, I think, is a good reason for prices to increase on Teslas, is just the value of the dollar has gone down quite a bit. So when it comes to FSD, you have to consider that they make far more money selling all of the used inventory vehicles with full self-driving, because most of those vehicles, I'm guessing most of them didn't have full self-driving. Those used vehicles are, of course, trade-ins that Tesla paid a decent amount towards for the people who were buying new cars. And then they took those used vehicles, added full self-driving to them, and now they can charge way more for those vehicles because they have a $10,000 technically software package. So yes, that's very frustrating on the consumer end, because that means that the vehicle costs a lot more to us, and we're like, can't we just take off full self-driving and subtract $10,000? Well, Tesla would make substantially less money that way. And the one advantage, the one perk of buying a vehicle used, as we're experiencing right now, and they kind of touched on this on the earnings call, is that as much as we all may want Teslas, and there's a lot of people out there that are like, I want a Tesla, but I'm trying to find a cheaper one, and I can't find one. The used vehicles are too much, and buying it new is too much. Way too many people want these things. Like, they straight up said it caught us off guard. Like, there's a massive wave of EV adoption right now where a ton of people are becoming convinced this is the future. This is enough, like, I keep trying to remind people of that in my personal life. Like, I don't know. I keep meeting family members or friends that are just like, well, I don't know about all this electric stuff, but maybe if they got the range over 400 miles, then it would start to take off. And I'm like, it's already taking off. People are buying these things like crazy, and they have 200, 300 mile ranges. And Tesla can't keep up. Like, if you want a standard range Model 3 right now, you got to wait till July to get it. So the perk of the used vehicle is that you can get it in a couple weeks or less compared to buying new. So obviously there's going to be a strong desire for any inventory vehicle that costs that you don't have to wait so long for. So that Tesla adds the full self-driving to all these used vehicles, because then they collect far more profit off of them. And you don't run into the issue of, like, the vehicle is built to last, right? Because there's no oil changes, and the regenerative braking means you don't have to use up your brake pads as frequently. So when that ends up being the case, you could have too many vehicles have their resale value go down over time because they're used and they're not new. And then everyone just keeps buying used vehicles, and no one wants to buy new vehicles because the used ones are cheaper, and the electric vehicle ages so well, and there's not much battery degradation, that why would I need to buy new when used is basically just as good as new in the EV world. It's not like the gas used market where you're worried about the transmission going bad, or you're worried about the brake pads, or you're worried about oil changes and how the last owner treated it. There's just less overall that can go wrong with the EV, so getting used isn't that big a risk. However, I will counter that even if Tesla did not add full self-driving to their used vehicle inventory, a lot of what impacts used vehicle prices is supply and demand. And right now there's an astounding amount of demand for Teslas, so the resale value is going to be much naturally higher, just because we know that there's a ton of people willing to pay. So like, there's no incentive for Tesla to sell used vehicles at a price no one is willing to pay for them, right? They're not going to put prices on the website that are so outrageously high, otherwise no one would buy them. They have to find that sweet spot where it's like, okay, you're making a decent amount off the used vehicle inventory, but you're also because they're giving a ton of money back to the people that trade them in, so they lose a lot of money on their next vehicle purchase. So they're trying to recoup that cost with the used inventory. And if they put the price at a sweet spot where people are willing to pay for it, and you're still able to secure a healthy profit margin on it, that's what they're going to keep the prices at. There's really not much logic in, okay, we sell every single used Tesla we put up with full self-driving. We sell every single one of them. Let's also now put some up without full self-driving so that they're like $10,000 cheaper. We make way less money, and they still sell out just as fast, if not faster, right? Because cheaper vehicles sell better. So there's really no financial incentive for Tesla, as they are going to use all this money that they get from selling used vehicles profitably and people buying full self-driving several times as they buy new cars over and over again. All of that money is going to go towards the factories. It goes towards R&D. It goes towards production. And, of course, the rising costs of manufacturing because suppliers are experiencing either parts shortages or labor shortages. So as much as I agree from a consumer perspective, yes, I wish Teslas were $5,000. That would be great too. But from a practicality standpoint, I totally get why they include FSD in all the used vehicles. There's not a good way, in my opinion, to make it transferable and profitable. You're just going to make far less. Yes, the golden days of last year when you could call Tesla and they could easily find a new Model Y for you in nearby cities and towns. Was there even a time where there were used Model Ys? In my memory, I can't remember a single time that you could just pick up a Model Y used. I've maybe once, I think I might have saw a performance Model Y with full self-driving, and I'm sure it was not even cheaper than new, that had 2,000 miles on it. But aside from that, correct, it's all about the batteries. I've been in the market for a car since 2019, and I've been putting it off for the Cybertruck. I'm losing my hair waiting on it. I'm sorry, Mr. Flyboy. This is part of the reason I think Tesla should be more upfront with the Cybertruck. I know that it's been delayed and 4680s have taken longer to produce and ramp up than they expected. And I know that the Model Y is the main priority on Giga Texas. But part of me is like, look, Tesla, if you tell everybody that the Cybertruck is coming sooner than it really is, that's going to hurt present day sales, right? There will be less people buying the Model 3 and Y if they know that there's this 300, 500 mile range, $60,000 truck coming out next year. That's what everyone's going to go for. Whereas if you start saying, hey, guess what? We're not going to do the dual motor option. We're only going to do the tri-motor Cybertruck, and it's going to be $80,000, and we're only going to have that as an option for 3 years. If you start coming forward with realistic expectations, then people will be like, oh, okay, that's way more than I thought. And that's not going to work for me, so I better just settle with a 3 or Y. But simultaneously, sales for present-day vehicles are off the charts, so that doesn't really solve the problem. Needless to say, demand is through the roof. I keep trying to remind people of that. The reason the estimated delivery of Tesla's vehicles is out 8 months, 6 months. On the Model X, I think it's almost out a year now. For the long-range option, that's a $100,000 car, and if you order one today, it says you won't get it until September. But keep in mind, Tesla's delivering more vehicles than they've ever delivered before. So it's not same number of vehicles as last year, but now with longer wait times. It's more deliveries than last year and significantly longer wait times. The only reason that happens is because there's a massive number of people ordering the cars. So yeah, demand is crazy right now, which obviously when demand is high, there's not much sense in lowering prices. In fact, there's a lot of sense in raising prices because it's kind of Tesla's way of giving you the death stare whenever imagine you're washing a ton of dishes in the kitchen and whatnot, and you're getting everything clean, and then someone comes by and drops another big plate of dirty dishes, and you're not even done with the last. It's I'm working here. Can you give me a second? So that's seeing the standard range Model 3 price go up and up and up, and the Model Y long range price go up and up and up. Now it's more expensive than it's ever been. Partly to do with inflation, of course, but it's also hey, if we can't build enough already and you're still asking for another one, yeah, we're going to ask you to charge a premium. But the only downside to that, I guess, is that I'm not sure how this is going to age because I've heard Elon say this is a short-term problem and we hope to lower prices in the long term. But if you have people ordering a Model Y for $55,000 now, and then 6 months go by and you decide to lower the price $1,000 or $2,000, then that person is going to much rather just either wait again or and they're going to much rather wait again and basically cancel their old order and reorder, or Tesla will have to factor in those price cuts into that old order. Because if you find out that, okay, I'm going to lose my $250 order deposit, but I'll cancel my order again, and I'll save $2,000, everyone's just going to do that. And then you have the problem of, you know, a bunch of canceled orders and then a bunch of brand new orders coming in. So it doesn't really fix much, but it makes me think that the prices of these vehicles might not be dropping much, unfortunately. You described the exact Model Y I got to test drive last weekend. Oh, cool, Lewis. I hope you enjoyed it. I always have fun every time I get to drive a Tesla, so I hope you did too. People were asking earlier. Yeah, I keep hearing, Lucas is saying similar things. He said, I just need a car until the Cybertruck comes out. I wish I could get a used Tesla, but the $10K extra for FSD makes it really out of my budget rather than slightly out. Yeah, I do think that ultimately does funnel down to supply and demand. Like the supply of used Teslas and new Teslas is incredibly low for the demand there is for them. People who can afford a $55K car are so rich, so to them, $2 to $3 grand more or less is not a big deal. No, I'm not saying it's a big deal. I'm just saying if they knew that they could save $2,000 by canceling their order and ordering again, why wouldn't you? Why would you hold on to your order if you knew objectively you could get it for cheaper without having to do anything? I guess the only reason to not cancel your order is if you need it now. So then you would gladly pay the $55,000. I think there's a lot of people doing the Tesla stretch, though, Giovanni. I think Tesla has talked about that in the past. Like the most commonly traded in vehicle for them is the Toyota Prius, which is substantially cheaper than anything Tesla is offering. So basically, a lot of people buying Teslas are spending way more on cars than they've ever spent before. So while we say like people who buy $55,000 cars are so rich, there's a lot of people that have like never bought cars that expensive that are now getting into this car market because they care about the safety, they care about the software and the autopilot and the electric range being the best. So they're like, okay, I'm definitely getting a Tesla, but this is the first time they'd ever be spending, you know, $50,000 on a car before. So to them, $2 to $3 grand does matter because they plan on holding on to the car for a long time. So that's not nothing. I don't think the only people buying Model Ys are like filthy rich millionaires. These are quickly becoming some of the most popular vehicles on earth. So I'm not saying $2,000 to $3,000 is a make or break the vehicle, but if there's an option or if there's a way for them to get the price lower, and if they're potentially not in a hurry, I think they'll take it. So I guess it'll depend on the estimated delivery window, right? Like if Tesla announces a price cut for Model Y and it's like, okay, now it's $53,000 instead of $55,000, but if you cancel your old order, you're going to have to restart that waiting process and you're going to have to wait 9 months. You'll save $2 grand. Flyboy says, officially in my top 3 Tesla channels on YouTube. Congratulations. Thank you. I don't know how I made top 3. There's so many better channels out there, but thank you. Yeah, Mike was a good example I was thinking of. He said, I saved every cent I could to get my Y. If I could have been cheaper or gotten the rear-wheel drive long range I originally ordered that was less costly, I would have gotten that. Yeah, but I will slightly budge back. Mike, I believe you paid extra for the 20-inch wheels because you knew you could get it sooner. So for some people, there is a bit of a, I'll pay more if it means, well, understandably so, because Mike, in his situation, like his old car was literally exploding on him. It was not working anymore. Like he needed a car. His old car was not operable. So it was like, how quickly can I get my next Tesla, my Tesla, because I don't want to have to buy a used vehicle that's going to hold me over until the Tesla is ready. So you were willing to pay a bit more to get it sooner. But if someone was in a situation where they were not in a rush and they didn't need the car as soon as possible, and it was just like, I would like the car, it might take a while for it to get to me, but I'll take a wait if it means it's cheaper. I think there's a lot of people in that camp right now. I'd be very curious to know what the numbers are for people that are sold on a Tesla but haven't bought one. Do you know what I mean? Does that wording make sense? I guess I'm trying to say, like, people that are convinced, yes, Tesla is my dream car. Absolutely, I want to get one, but I either am not in the financial situation to buy one right now, I don't have the money, or I'm waiting for the prices to come down. Like I'm waiting for 4680s, or so many people out there I know are waiting for the Cybertruck. And I'm sure some of those Cybertruck orders are like first-time Tesla buyers, people that have never bought an electric car of any kind, but once they saw the price and the range for the Cybertruck, they're like, yeah, I can do that. And we'll see if they hang with it, with the Cybertruck getting more expensive and probably removing some of the options that people care about. So, yeah, I'd be very interested to see like the number of people that are like, yeah, I want to get one, or I will get one someday. I just can't right now. So like we're already seeing crazy demand and an amazing amount of back orders with all their trims, but imagine what it potentially could be in the long run. It's actually quite mind-boggling. I mean, the monthly payments, because they don't pay the whole price up front. Some people pay the whole price up front. Some people do loans, but yeah, we don't have Teslas in our country. I hope you will soon. I would get one if I could afford it. 20-inch wheels was a last-second decision due to supply constraints. It was either biting the bullet or finding another option. Yeah, I would. If I was in your situation, I would have done the exact same thing. I would rather pay the extra, what is it, $2,000? You got pay the extra $2,000 for the 20-inch wheels instead of having to find a used car for $3,000 or $5,000 that hold you over. Waiting on 4680 and cannot wait now till summer 20, but cannot buy now until summer 2023. Wow. That's a while. I'm glad Lewis enjoyed the Model Y. It was the first Tesla I've ever interacted with. Nice. Well, I'd have to say it's probably the best one. Giovanni says, I'd buy an EV, but I don't want to spend so much money now. Rather invest it and keep using my cheap ICE. Yeah, I think I'm in the same camp as Giovanni. I just want to give a special shout out to all of the EV and Tesla fans out there that don't own an electric vehicle, because I'm in that camp myself of just the like, I don't drive very much. So it's hard to justify, and also with the wait time so long and the price is so high, it's like difficult to say it's worth it for me right now. But absolutely, spending more of my money on investments. Waiting for Tesla to make cars in the EU so that it's cheaper to buy. Yep, that's the plan. This Tesla fanboy only buys $5,000 used car. Are you referring to me or yourself, Doug? Because my car was under $4,000, but I've had the same car since high school. This is my second car, technically. We're actually planning a road trip. I say it just as I say, like, we don't drive very much. We're planning like our first road trip in probably a year or so, a longer road trip. Oh, I guess we did a road trip this summer, but that wasn't my car. I had to drive that car for I was basically helping my parents move out of state, and they needed someone. My dad was driving the U-Haul, and my mom was driving her car, and my dad needed someone to drive his truck. So I was like, okay, I'll drive the truck. And so I would have had to driven on that road trip anyway. That wasn't, I couldn't have, even if I owned a Tesla, I couldn't have taken it on that trip. Tesla's my dream car, but I can't afford one. I'd like a smaller car, so I hope the 25K comes out. I'm hesitant to call it the 25K one because I really don't think it's going to cost that. If you're on the fence with a Tesla, get an Aptera. Well, those aren't out yet. I would love to get an Aptera if they were available. But yeah, we got to watch and see if they'll actually release something. Intelligent fanboys buys Tesla stock rather than Tesla cars. I'd say intelligent buys both, but yeah. Okay, Doug says I did mean me. Okay, me and Doug are in the same boat then. Let's see. I don't drive EV, but I update OpenStreetMap, PlugShare, charger data. Oh, okay. Interesting. Brandenburg factory cannot come online fast enough. No, it cannot. Hopefully within the next few weeks here. That would be great. But I got to get going here. I appreciate the questions, and new member, thank you very much for that. I hope you guys have an excellent rest of your day. More videos will come throughout the week, but thanks for tuning in during the earnings call. As uneventful as it may be, it looks like Tesla's looking good financially, and their success will be continued. And I'll see you guys in the comments and on Twitter. Thanks all. Have a good day. Bye-bye.